This week, we received news that the mortgage applications dropped to a 28-year low. Not since 1995 have we had this low number of mortgage applications that have come in. And we've also been fighting the 30-year fixed rate right now, which is 7.31%. So the idea is, do the two of these kind of play together? Is that the reason that we're seeing this precipitous drop in the number of mortgage applications? And I think that the answer to that is yes. There's a lot of moving parts here, but the last time we had a 7% plus 30-year fixed mortgage was in December of 2000. So we're looking at 23 years since we've had interest rates at this level. And one of the things that we're looking at is there's a lot of people that are saying, Jay, these interest rates are going up and up and up. It's time for the Fed to pause and then reduce the interest rate so we can get back to where things were at. And every time I hear that, I kind of smile thinking, well, that would be great, but Jerome Powell, the Fed chairman, has made it clear that they want a 2% inflation rate and they're going to work until they get to that point. They recently paused the interest rate hike chain for a month, but that doesn't mean it's going to continue to stay paused. In fact, as we're seeing more and more economic data, seeing more jobs data, the more that it's convincing me that we're going to be on track for another quarter point interest rate hike here coming up in the very near future. That's going to impact the stock market slightly. It's going to impact home sales slightly, but it's not going to be having an overreaching hammer effect on the market as we move forward. But it's certainly a continuing step in that direction. Sadly, right now, there's a lot of individuals who are seeing this 7% and higher interest rate, and they're renting right now because they're saying eventually the interest rates are going to return to the 6, 5, and 4% range, and I will buy a house then. It could very well be that we could be looking at these interest rates at this level for an extended period of time. In fact, they could go up considerably more than that. I mean, it hasn't been that long ago when you look at things from a historical standpoint that we had interest rates of 16, 18, 14, 11% that were around for an extended period of time. So what I'm saying is there's a real possibility that interest rates could continue to rise, just like there's a possibility that the interest rates could drop. There's people right now that are even buying homes that they can't afford at 7%, saying as soon as the interest rates drop, they'll be able to refinance into something that they can afford. That's a very dangerous position to take. But as we move forward this week, we're going to hear from Jerome Powell on Friday in Jackson Hole, Wyoming, as he gives his latest state of the economy speech. And hopefully investors will be able to glean from that an indication of what the Fed's next steps are going to be. And at this point in time, things seem to be pointed towards an interest rate hike of at least a quarter point or so. And certainly that's going to impact all the mortgage applications as well as the future of the interest rate percentage. And it's going to be something that's going to be very interesting to see, and we'll certainly keep a very close eye on it.